Okay.
The broadcast is now starting. All attendees are in listen-only mode.
Good day, everybody. This is the Forex Fundamental Analysis for July 4th. Welcome. It's brought to you by OctaFX, an award-winning broker that has one of the lowest spreads in the industry. Before we begin the show, a few disclaimers. Risk disclaimer: trading foreign exchange and margin carries a high level of risk and may not be suitable for all investors. You should not invest money you cannot afford to lose. In the hypothetical trading disclaimer, the information in this webinar is provided as general market commentary and does not constitute investment advice. A few quick words about myself. My name is Yohay. I'm a Forex analyst. I used to be a retail trader and a computer programmer. I founded Forex Crunch back in 2008, and I focus there and also here on fundamental analysis, but of course we'll touch also on technical levels. On the agenda, as always, big stories, moving markets. We just had some news from North Korea. The next events to look out for. We have a busy week to begin the new quarter. Key levels of support and resistance. And we'll do it for all major currencies. When we're talking about the dollar, we'll focus on dollar yen. Then we'll move to the euro with euro dollar. The pound, which is a bit messy. The Australian dollar, which is falling. And the Canadian dollar, which is surprisingly stable. Okay, so the top stories for today. We had the dollar recovering after a bad week. Last week we had many central banks going hawkish, but not the US Federal Reserve, which had some doubts about inflation. We didn't hear anything from Elam. And we had some currencies taking advantage of the weakness of the US dollar, not the Japanese yen. This morning we had some news from North Korea. They tested another missile. It's not the first time, it's the 11th missile this year, but this time is different because they claimed it was an ICBM, an intercontinental ballistic missile, capable of reaching all the world, according to North Korea. According to other experts, it's capable of reaching Alaska. In any case, it is seen as an escalation. When we have trouble in the world, we have the Japanese yen getting stronger, even though the trouble is in North Korea, very close to Japan, and we already know that North Korea is capable of hitting Japan if it wants to with missiles. Okay, so that's worsening the mood in markets and specifically moving dollar yen lower. We'll see that soon. It's a very busy week. Today is relatively quiet apart from this news from North Korea because it's the 4th of July, it's Independence Day in the United States, so trading volumes may be a bit lower. Maybe a few more air pockets in markets, maybe a few more boring hours, but the news flow continues. And after the holiday in the US, we have the meeting minutes from the Fed and also the non-farm payrolls with the full build-up. Okay, and before a few days ago, we had all these nasty tweets from President Donald Trump. So far, we haven't seen any reaction. The general thinking is, if Trump gets into more trouble because of his behavior, he has less political capital to advance tax reforms, and that's bad for the US dollar. So far, I think markets got used to this political unease, to these tweets, offensive tweets, but it can get back to the to become main news and impact markets. And over the weekend, we had local elections in Tokyo, Japan's capital, and Prime Minister Shinzo Abe, he was defeated there. His party lost to actually a candidate that used to be in his party. In any case, some speculate that this could mean less reforms for the economy and perhaps more stimulus by the Bank of Japan. It's just a speculation, something to keep also on the back burner, in the back of your mind, but so far no impact. The biggest impact came first from the re-strengthening of the US dollar, this recovery. Two main headlines here, and then we've seen dollar yen fall from the highs on the news of North Korea. Okay, some data. Late last week we had some good news from the US, an upgrade of GDP to 1.4% in the United States. The original report was only 0.7. was revised to 1.2 and now to 1.4. So it's still very weak growth, but not as bad as originally reported. On the other hand, inflation looks weak. As expected, core PCE price index, the Fed's favorite inflation measure. I always mention it because the Fed mentions it also at the same number, 1.4, going down. It reached already 1.8 early in the year. And we had yesterday good news from the US. Again, the seesaw of good news, bad news continues with the manufacturing PMI, the first hint towards the non-farm payrolls, beating expectations, coming out at 57.8. So the manufacturing sector looks optimistic. It's always important to remember most of the US economy, most developed economies are about services. 3/4 of the US economy is services, not manufacturing. Okay. All in all, the dollar is up across the board. The gains in dollar yen later erased, of course, by the news this morning. If we look forward, today it's probably going to be a quiet day unless we have some breaking news, because Americans are busy with their Independence Day festivities. Tomorrow we have the meeting minutes from the latest Fed decision. Let's see if they're a bit more worried about inflation or not. Okay, remember, the document is revised until the very last moment. It's not an exact report of what happened 3 weeks ago at the rate decision. It's actually a document that is edited until it is released. The Fed officials know that it has an impact on markets. Okay, and further big hints towards the non-farm payrolls. Thursday, 12:15 GMT, we have the ADP Non-Farm Payrolls. It's a report for the private sector. Not always well correlated with the actual non-farm payrolls report, but it has an impact on the dollar against the yen, on the dollar against everybody. The services sector report also comes out on Thursday at 2 GMT. Watch out for the employment component over there. And we have, just before the non-farm payrolls, a speech by Stanley Fischer, the vice chair number 2 at the Federal Reserve, coming on the eve of the non-farm payrolls. And of course on Friday, with all this build-up, non-farm payrolls report, watch out for wages, as usual. We'll discuss this also on Thursday. In general, we're talking about wages that were stuck at 2.5%. The Fed would like to see them rising. It's more important than the actual gain in jobs, which is expected around 180,000, but a bit less, a bit more, not that critical. Wages need to go up in order to really convince the Fed, convince markets that there's going to be a rate hike. Okay, in general, dollar yen is the most sensitive currency to US indicators. Moves with the chance for rate hike. We'll get indications of that later this week. Falls and rises with Trump, a bit less than I would say a month ago, and it falls and rises with risk. Currently it is falling, dollar yen is falling because it's a risk off environment, because of these worries about North Korea. And let's go to the charts. We'll use the OctaFX MT4 platform. Okay, so here we are just above 113 at the moment, so we are recovering from this news about North Korea. All in all, the levels to look out for here are on the top side we have 115.45. If we look way above the levels that we've seen last time, I mean the cycle high of 114.30. 114.30 is the next high, of course. The most recent high of 113.45, which we've seen yesterday when the US dollar was on the rise, also against the yen, when there was a better mood in markets. That's the immediate line of resistance. To the downside, we're talking about 112.60. Okay, that's where we fell to very recently. Then we're talking about 111.80, 110.70. These are already more veteran lines, and 108.10, the cycle low. As you can see here in the chart, let's zoom in a bit. We are now trending upwards. Okay, still, despite the news this morning, trend is still to the upside. We're in an uptrend channel. We're seeing higher lows and higher highs. Okay, let's continue. Let's get back to the next currencies. Let's move on to the world's most popular currency pair, euro dollar. Euro dollar takes a break. It had a big rally last week, enjoying the hawkish comments from Draghi talking about gradually removing stimulus, about a move from deflation to reflation, all optimistic words, but it's taking a break. Even though figures were quite good on Friday, Eurozone inflation beat expectations with 1.3. Okay, a small drop related to oil prices. More importantly, core inflation went up to 1.1%, a positive surprise, showing that the economic recovery is reaching also inflation. German retail sales came out better than expected, 0.5. German Chancellor Angela Merkel continues having the same lead like last week, 17 percentage points in the opinion polls towards the elections in September. That's also what markets want to see. And manufacturing PMIs, were quite balanced as expected, remain positive, continue showing growth. Another thing doesn't appear here, we had a speech yesterday by French President Macron laying out an ambitious plan for reforms. That's also what markets want to see. Let's see what happens. Next big moves for Euro. Tomorrow between 7 and 8 we have the services PMIs. They should have a minimal impact. More importantly, on Thursday we have the meeting minutes from the ECB. It can show us a bit more, reveal more about how they see the balance between being positive on growth and a bit worried about inflation. Again, recently Draghi was a bit more optimistic. And we have German industrial output, the largest economy in the Eurozone, the locomotive of the Eurozone, publishes these figures on Friday. Recent movements in Euro-dollar. On the monetary front, the ECB and the Fed are now balanced after Draghi. Okay, this is a change from a week ago. These comments in Portugal last week make both central banks on a tightening path. This correction that we're seeing right now, the drop from the highs to 100 pips lower, more or less, they could be followed by more gains. I see it as a necessary correction, not a change of course, not a change of direction. Growth is stronger in the Eurozone, 2.3 in Q1 against 1.4 in the US, and politics look more stable in Europe than in the Eurozone, but politics now are less important after the French elections. And okay, let's look at the charts. Let's see what's going on in Euro dollar. Currently 113.60. We can see here the upwards move since the beginning of the year. A relatively long period of consolidation here between 111 and 113, and then a break to the upside. So if we look from levels that we don't see here on the chart, if we have a break to even higher ground, we're talking from the top about 116.20. Then we're talking about 115, a very round number. The most recent high that we've seen the past few days has been 114.45. That's the immediate line of resistance. Immediate support at the previous resistance line of 113. And we're talking about a busier area with 112.30, 111.20, and 110.25, the initial high there after the second round of the French elections, and then 108.40. All in all, Euro dollar is trending up. Okay, now it's consolidating. I believe it's quite necessary to take a break, to take a breather before moving up. The trend remains to the upside. Okay, let's move to the United Kingdom, to the UK. There, it's quite a mess. There are reports about a softer stance on Brexit. It came out in the British press yesterday, and we know that the Chancellor of the Exchequer or Finance Minister Philip Hammond is trying to push for a better trade deal with Europe, a softer Brexit, perhaps allowing for more immigration, and that is positive for the pound. But on the other hand, the UK economy isn't doing that well. We got a reminder of that yesterday with the manufacturing PMI coming out worse than expected at 54.3 points, and a reminder also of the first quarter, which had weak growth at 0.2%. There are worries about the economy, and this is reflected in the most recent data. These worries are growing. And Carney's hawkishness. Carney, contrary to Draghi, which moves slowly, Carney 2 weeks ago was said it's not appropriate to raise rates. Last week he said we'll remove stimulus. That means we'll raise rates relatively soon. It's a bit messy. Currently is hawkish. That means the pound is supported, and it still helps keep the pound. We're under 130, but still looking strong. The most recent slide in the pound is also related, of course, to the correction in the US dollar. The next events, we have more PMIs, more purchasing managers indices, more forward-looking numbers. Today we have the construction PMI. The most important figure is tomorrow, the services PMI. It's 79% of the British economy. This is a survey. It's what's considered soft data, not hard data. It doesn't look at the past, looks at the future. But markets are all about speculation about the future. On Friday we have house price index. There are some worries about the housing sector, so we get some data on Friday. And also industrial output. The smaller manufacturing sector gives us some hard data. Okay, I know the pound, the good, bad, and the ugly, as we do each time. Hopes for a softer Brexit are now positive for the pound. The bad is economic weakness, evident in 2017, wasn't seen beforehand. And the ugly is a divided Bank of England. Some are more hawkish, some are more dovish, and Carney is currently hawkish, but he can change his mind at any second. Okay, let's look at the pound under 130. Here we are. So we're currently in a higher range. If we break above this line, the cycle high of 130.50, we're talking about 130.130. 130.50 is sort of the strong resistance, followed by 129.75. Then very closely 129.20, the immediate line of support. Looking lower, we're talking about 128.20, 127, 126.30, and way below 125. Okay, so currently I would say in range, looking for a direction with lots of moving parts for pound dollar. Let's continue. Let's move to the Australian dollar. We had lots of action there. The Reserve Bank of Australia a few hours ago left interest rates unchanged. In theory, no news. However, they are worried about household debt related to mortgages, and they're worried about wages, like other central banks. Maybe the employment situation is good, but people's wages are a bit low. No optimism. The Reserve Bank of Australia, the central bank there, stands out by not being optimistic in comparison to the Bank of Canada, another commodity currency, the European Central Bank, and the Bank of England. So we've seen quite a big fall in the Australian dollar. And this lack of optimism from the Reserve Bank of Australia has a strong impact, and the Australian dollar falls despite retail sales, a figure released just a few hours beforehand, showing coming out better than expected with 0.6% growth. Next big event in Australia, we have trade balance Thursday early morning, 1:30 GMT. And looking already to next week, we have Chinese inflation data and a business confidence survey from NAB, a big bank in Australia. All in all, after reaching the limit, Aussie dollar began falling. Now it's fully related to the Reserve Bank of Australia. We can see the immediate impact. Positive data from Australia, such as jobs, or positive data from China, didn't help too much. Okay, we had some fresh dollar strength. Well, also weighing. Now we have something more balanced. But anyway, the most recent move is to the downside. But moves are a bit more subdued than in the past. Okay, let's look at the chart here. MT4 platform. The trend still remains to the upside, but now we're flirting with the bottom of this channel. Okay, we're seeing an uptrend channel here in Aussie dollar, but now we're flirting with the bottom. If we fall below this channel, perhaps we have an open road to further falls. In any case, levels from top to bottom: 77.50, 77.10, most recent high, 76.35. Below that, we have a big gap towards 75.60, and then it's very busy here. Lots of support: 75.40, 75.15 and way below 74.10. So we're still in an uptrend here. We can still see an uptrend channel, but it will not necessarily last because of the Reserve Bank of Australia. Okay, let's move to the Canadian dollar. Canadian dollar was a star, but let's see if it will continue. Governor of the Bank of Canada, Stephen Polow, said that inflation will pick up in 2018. That's optimistic. That keeps the Canadian dollar a bid. Canadian GDP rose by 0.2% as expected in April, following a very strong first quarter growth that triggered some hawkish words from the Bank of Canada that helped the Canadian dollar rise. OPEC, and we're talking about oil. The production of OPEC is rising, and that's of course negative for oil prices. But on the other hand, it seems that US production, which is a bit more relevant also for Canada, is reaching a limit. The number of oil rigs is falling for a change. Production, the rise in production is slowing down, even grinding to a halt. We're seeing oil prices touching $47 in WTI crude oil, the American benchmark, the West Texas Intermediate, and that is also good news for the Canadian dollar. Okay, so we've seen the US dollar recovering in the recent days, but the Canadian dollar is very resilient, stands still, shows its strength. Okay, next big Canadian events. Trade balance tomorrow, on Thursday, together with the building permits in Canada, released at the exact same time. The biggest event for the week is, of course, the jobs report, Friday 12:30 GMT, released simultaneously with the US jobs report, so it'll be a very messy hour for dollar CAD. We also have the Purchasing Managers Index, the Ivy one, the Richard Ivy School of Business, released on Friday, but the main event is the jobs report. Dollar CAD in general, now in a downtrend. That means the Canadian dollar is strengthening. Domestic strength. Oil prices, which are now rising, they all boost the loonie. Canadian dollar, it's another name for the Canadian dollar. 130, we're seeing a battle around 130. And let's just show everything on the charts here. OctaFX's MT4 platform. A big downfall here. Big downfall in dollar CAD from the highs. Reached a high of 137.90. We're now in a very, in a low range. Let's mention all the levels. So 135.40 is a high level. 133.80, once we broke under this level, the pair never looked back. It's followed by 133. Also a level that held until it broke down and we never looked back from there is 131.60. And then we had 130.20 as just around the round number of 130 as the recent high. It's in the immediate line of resistance, and the most recent low is 129.45. That's immediate support. If we look further below, we're talking about 128.20 and 127.50. These are old lines that provided support or worked as resistance for the pair if we further fall. Here the trend is quite clear. Contrary to the Australian dollar, there is no significant setback, just a very minor consolidation. Okay. So that's it for today. Thank you very much, everybody, for coming. Comments and feedback are always welcome. And stay tuned for more educational webinars. We had last week one that was about trading the news in general. We had two about specific currencies, the euro and the yen. These will be followed up next Monday with more. Stay tuned on the OctaFX website for all the webinars, educational content, and the fundamental analysis explaining what happens in markets. In the past week or so, we had lots more action than beforehand. Hopefully, this will last. So I wish everybody a safe and successful day in markets, and see you soon. Thank you, and bye-bye.